Hey everyone, welcome to the channel. Today we're diving into a powerful financial strategy that most people have never heard of, yet it has the potential to completely change how you think about your money. It's called the infinite banking concept, or IBC for short. Now, I know it sounds like some mysterious financial trick, but it's actually based on something rock solid and incredibly safe: dividend-paying whole life insurance. Let's break it down in simple terms. The infinite banking concept was popularized by R. Nelson Nash in his book Becoming Your Own Banker. At its core, infinite banking is about taking control of the banking function in your life, instead of always relying on traditional banks, lenders, and credit cards when you need money. Imagine this. What if you could build a system that lets you save, grow, access, and reuse your money tax-free with no penalties and with full control? That's IBC. It uses a very specific type of high cash value whole life insurance policy to do that. But this isn't your average insurance policy. We're not talking about something your grandma bought to cover funeral costs. This is strategically engineered, overfunded policy with an emphasis on cash value growth, not just the death benefit. Here's how it works. You pay premiums into your policy. A portion of those premiums goes to the base insurance, but a large chunk, called paid up additions or PUAs, goes directly into building your cash value, which starts growing immediately. This cash value grows tax deferred, earns guaranteed interest, and here's the kicker: it also receives dividends from the insurance company, which you can reinvest to supercharge your growth. Now here's the part that makes it so powerful. You can borrow against your cash value anytime, for any reason. No applications, no credit checks, no penalties. And while you're using that money, say for a car, business investment, or even to pay off debt, your full cash value continues to grow as if you never touched it. Why? Because you're borrowing against it, not from it. This would allow you to become your own banker. You're recapturing interest that would normally go to a lender and keeping that money in your own private banking system. So why are more and more people turning to infinite banking? Here are a few big reasons. Access to capital. No more waiting for loan approvals or jumping through hoops. Tax advantages. Your growth is tax deferred and loans are tax free. Guaranteed growth. Your money grows predictably, even when markets crash. Privacy and control. No government reporting, no penalties for using your money. Legacy building. You still have tax-free death benefit for your families or heirs. Plus, when designed right, these policies can be used for paying off debt, funding real estate deals, creating retirement income, helping your kids buy their first home, even becoming your own source of business funding. Now let's address a couple quick misconceptions. A lot of people have told me whole life insurance is a bad investment. Right, it is a bad investment if you're looking at it as just an investment. But infinite banking isn't about rates of return, it's about control and cash flow. It's a strategy, not a product. Another thing people have told me several times is it takes forever to build cash value. Yes, only if the policy is designed the traditional way. With IBC, we use specifically designed high paid-up addition policies that grow fast, often giving you access to 60 to 90% of your cash value in year one. So to wrap it up, the infinite banking concept is a powerful wealth building tool that gives you control over your money, access to tax-free capital, and a system that serves you for the rest of your life. It's not mainstream, it's not taught in school, but for those who learn how to use it, it becomes a financial foundation that creates freedom, stability, and legacy. If you found this interesting, hit that subscribe button and stay tuned. We'll go deeper into policy design, examples, and real-world use cases in upcoming videos. Thanks for listening, and remember, don't just be a consumer of banking, become the bank.